Okay, we're going to get started. Good morning, everyone, and welcome to the Prince George's Community Federal Credit Union Steps in the Home Buying Process. Today's presentation is brought to you in partnership with CUMA, which is our mortgage department entity within the credit union here. As the premier credit union of Prince George's County, we have joined with CUMA to provide you resources in helping you with your home buying journey. Today's presentation will be discussing the home ownership process as well as a number of mortgage solutions that we have available. Prince George's Community Federal Credit Union is a full-service financial institution serving anyone who lives, works, worships, or attends school in Prince George's County, Maryland. We're one of the county's best-kept secrets with competitive loan rates and savings rates, as well as discount at national retailers. We serve currently over 17,000 members in the area, and we welcome you to come and experience the benefits of membership as well. Now, later on in this presentation, we're going to display our contact information and answer any specific questions that you may have concerning your financial needs. It's not too late to have your friends and colleagues join today's webinar. Now, you should have received an email about 30 minutes ago, and in that email, there's a link that you could pass along to them to join this webinar. Also, feel free to follow us on any of our social media platforms and tag using the hashtag #LunchAndLearn. Please know that today's webinar is live and all phone lines have been muted. If you have any questions, please feel free to type it into the question box that's located on the right-hand side of your menu bar there. All questions will be addressed at the end of our discussion. Lastly, a recording of today's session will be available later on next week. Details are going to be sent to your email following the presentation. And with that, we're going to turn it over to Sean Connell, who is our representative over at CUMA. He has been with CUMA for, Sean, like 20-plus years, and an expert in the field, and we are glad to have him. Sean, thank you so much for joining us.
Thank you, Charmaine, you and the credit union for having me. My name is Sean Connell. I've been in the mortgage business going on 38 years, and it's a great time to go over the steps in the home buying process. I'm going to give you a little bit about the steps, how to go about it, the market, where we are, interest rates, and more importantly, why you need to go through your credit union for your first mortgages and for your financial needs. You'll save a tremendous amount of money. We'll go ahead and get started. Let's go to the next slide. And why it's a great time to buy. Go ahead, Charmaine, and just load that screen up with everything. We are entering the home buying part of the market. So everybody's going to be getting some tax money back. This is the time the home buying season really starts kicking off. And yes, it's a great time to buy a house. When you go through your credit union, our job is to find you, based on your qualifications, the lowest interest rates possible for your situation. We are a full menu borrower lender for your credit union, so any and all loan programs, products that are available to you as a member. The most important thing, too, is that we also offer lower than industry closing costs. Keep in mind your loan officers in the brokerage business, bank business, they are in it to make as much money as possible on you. We, on the other hand, are owned by the credit unions, and we provide services for credit union members, which means the lowest interest rates. We do not tack on junk fees. We do not, charge additional points and origination fees. We're going to keep those fees as low as possible because that's what credit unions do. They try to find you the very best loan program product available. We are able to lend nationally. So if you're looking to retire somewhere and buy a house, as long as you're a member, we can assist you nationally with all of your mortgage needs, and we have every program and product that's available to you. Some things to keep in mind. Yes, we offer the very lowest interest rates, but we came off a historic low interest rate market. So yes, it's going to be a little bit more costly to borrow money now, but in turn, housing prices are starting to fall, what we're seeing on a national level. When interest rates were low, the property values kept increasing, the sales prices were increasing. Now, yes, interest rates have ticked up a little bit, and you're able to find those online or speak to a mortgage loan officer. But more importantly, we're starting to see the housing prices. We're seeing it being a little bit more of a buyer's market. Sellers are interested in selling their homes, so they're reducing the price of their home by $25, $50, $75, in some cases $100,000, because again, as interest rates go up, there's less buyers, and that turns into a little bit of a buyer's market, which is a great opportunity for you. Let me tell you a story about when we got out of college back in a long time ago. Interest rates for the first mortgages went up to 18%. And I had a college roommate that came, and it's from this area, the Northern Virginia, Maryland area. And he bought when he got out of college, and his interest rate was at 16.5%. That's a lot of money. Rates right now are running 4 and 5%. Not historically low, but certainly not of the high interest rates that we were when we were getting out of college. Well, he bought a modest home at the time, $175,000, and everybody said, "Why in the world are you buying a home with that interest rate?" Well, ladies and gentlemen, what he did over the so many years, he refinanced when interest rates fell. He found his perfect home. He stayed in it, and he just sold that for $1.8 million. So owning a home is very important for you to have a place to live. You get to write off your interest rate, but you're also gaining equity on an appreciable item. So yes, the rates are a little high, but it's still a great time to buy in this area. We have all of the national first-time homebuyer programs and products. We have the first-time homebuyers, which is little as 3.5% down. We have VA, if you're VA eligible, you're military or something along those lines, or a spouse of military that you qualify for VA. Those are zero down programs for purchases and refinance. One of the most important programs by going through the credit union is the Home Advantage program, and it's a rebate program. If you do not already have a real estate agent, we recommend strongly to utilize this free program to you. Our loan officers will be able to assist you in getting pre-qualified. We're going to talk about that. But if you need assistance, they will also get you registered in the Home Advantage program and to find you a vetted real estate agent in this area that knows your area. By utilizing this program, not only when you buy a home, but when you sell a home, these agents are giving you back what's called 20% of their commission as free income. So you can go through the credit union, buy a home, get a loan, and get a free cash rebate. So right now, there's 3 ways you can use that cash rebate. You can use that to help pay closing costs and apply it to your closing costs that are going to be incurred. You could use it to buy the interest rate down a little lower if you would like. Or after you close, that agent is going to send you a check in the mail, free money that you can utilize. And let me tell you my story. I moved up from Virginia Beach, Virginia to work here at Credit Union Mortgage about 18 years ago. And when I came up here, my college roommate, who I just talked about at the 16.5% interest rate, he's a real estate agent. Came up and said, "Hey, John, they've got this program that they're going to pay me 20% commission. Will you do this so you can, find me a place?" He said he couldn't do it. So I utilized the Home Advantage program. We had the very lowest interest rate we could get, and when I bought up here, it was 6.5%. I've since refinanced when the rates went lower. So we had the lowest interest rate at the time. We had all of our closing costs were paid by the seller. And then what we did is we got a check in the mail, a significant check in the mail that my wife immediately had me sign. And I learned about window treatments and balances and things like that in the house. So again, it's a wonderful free program to utilize when you're buying a home and when you're selling a home, and your loan officer certainly will walk you through and get you up to date and registered with that program. Next slide, please. We have a number of contact ways that we can work based on technology. So there's a number of different ways you can apply. You can go online at the credit union's website. I call this my son's generation. He's 30 years old. They do everything on a laptop or a cell phone. He can log into the credit union's website. He can run loan scenarios, 10% down, 5% down, whatever the programs, see all the programs that are available, and he can apply 24 hours a day, as you can as well. That loan comes into our system. It gets assigned to a loan officer who will reach out and assist you as needed and necessary. So through the credit union's website, you have all the links, tools, and resources that you can begin reviewing, and the home rebates piece is under, or the Home Advantage is under home rebates, that you can utilize if you're comfortable using technology. I am not of that generation, but I'm going to be able to call and speak to a mortgage loan professional directly. I just don't reply online. It's not my generation, but I will pick up the phone, and we have the phone numbers here that you can call and speak directly to a mortgage loan professional, and they can assist you through and walk you through the process. They can help take applications. They can run different programs and products. They can assist you throughout that particular program. We also have the availability, if you'd like, again, to call, and if need be, you can schedule a time. This is my father's generation. He's not applying by online. He's certainly not calling to apply. He's retired military. He wants to come down and sit face to face, and we can arrange a loan officer meeting that can assist you through that program. Again, members you can sign up online through the credit union's website, the home rebates piece. You can sign up for this free program anytime, and it'll help you look and find properties in your area that you may be interested in. What's the property value? There's pictures. You'll see the school information. You have just a plethora of information available to you. If you are, technologically savage and you like to do that through a computer, please feel free. Again, our loan officers can walk you through that program as well. A wonderful, wonderful program is that. And then again, you can stop by any of the credit union if you're on site, in person. You can speak to anyone if you're interested in applying. The staff can make a direct member referral to the mortgage department, and we will have a mortgage officer reach out and assist you with your needs and walk you through those particular programs. Now, there's a difference between what's called a pre-qualification, a pre-approval, and a full loan approval. A pre-qualification is just that. It's a quick calculation of how much you can possibly afford based on your income and debts. This is not a firm commitment by any stretch of the imagination. Our loan officer is going to talk to you based on your income, your debts. The rule of thumb is if, let's say, the household income is $100,000, you should be able to qualify for a $400,000 to $450,000 loan. So it's 4 to 4.5 times your household income. But that does play into your debts, different things like that, how much debt you have as well. But a pre-qualification is just that, pre-qualifying. They want to make sure you have good credit before we get started with the process. You want to get pre-approved, and you want to get a pre-approval. So the pre-approval you'll be working with, you're going to apply. Your loan officer is going to take your application. We're going to get your income information, your assets, your cash, your savings, your 401k, your credit, your debts. We are going to then give you a pre-approval. Your loan officer will give you a pre-approval letter stating what you're pre-approved for. Now again, just because we say that you qualify for $400,000 or $450,000 doesn't mean that you run out and buy a $450,000 house. The first house that I bought when I got out of school was, I think, $88,000 because that's what I qualified for based on my income. And, we bought a $88,000 house. Well, life happens. Cars break down, hot water heaters break, you get married, you have a child. So just because we say you're pre-approved for $400,000 to $450,000 doesn't mean you run out. You run out, and you're going to be responsible for your physical, bills and the responsibility on making that payment. So you want to do something that you're comfortable with. Pre-approvals last 90 days. So once you're pre-approved, that's something you want to keep for 90 days. It's going to be based on the interest rate as of today. That rate could go up, that rate could go down. You will work directly with your loan officer. And when you are pre-approved, and let's say you find a property at $300,000 that you would like to buy, what you'll then do is you want to reach out to your loan officer and get a pre-approval letter for $300,000. You do not want to give the seller a pre-approval letter saying that you're qualified for $450,000 because they won't negotiate. They know that they can push up the price a little bit on it. So work closely with your loan officer. It's good for 90 days. If you need to go in and get that reinstated for another 90 days, your loan officer will be assisting you to do that, and as long as you need. And then there's what's called a full loan application. So you've got your pre-approval letter. Hopefully you're working with a CU Realty Home Advantage agent so you can get your cash refund. And then you start looking for properties that you're looking to make an offer on. Once you go out and make that offer, you're going to write up a full contract, and that contract will be submitted to your loan officer. And then that's where we're going to go in and do what's called a full approval. We'll update all of your pre-approval documents that you provided, and we will take the ratified sales contract and we will move forward based on the contract at hand that you've negotiated with the seller. Please make sure that you utilize a real estate agent throughout the process, because they're going to help you through all of this and help save you some money as well. They know the market, they know what you can ask for. You might be able to ask for some closing costs from the seller. You'll be able to negotiate sales prices down. There's a lot of things that you can do. You also want to utilize a real estate agent because when you buy the house, you want to make sure that you have a home inspection done to make sure there's no issues on the foundation or heating and air conditioning. All of these things that you buy and you could walk into, you might be replacing a hot water heater in a month. They might be able to find you that home warranty program that's going to protect you from a big item as well. The seller may pay for that along those lines. We did have a congressional staffer who wanted to negotiate their own sales contract without an agent. They put an earnest money deposit down of $100,000, and then the contract never closed. and the person lost their earnest money deposit. Earnest money deposits run anywhere from $500 to $1,500 on the normal, and again, not working with an agent costs that person lots and lots of money on that. So it's very important that you go through and get pre-approved for what you're looking for and what you're comfortable with. The reason is the realtor, the Home Advantage realtor or your realtor, won't show you houses unless they know that you're pre-approved and you can afford to buy the house. The next piece of that is that most sellers will not review a contract offer without a pre-approval. If I'm selling my house and you're not pre-approved, I'm not going through the time and the effort to write up a contract, take my house off the market, and then to come find out 60 days from now that you do not qualify to buy the house. And I've missed potential buyers on that. So again, if you're very interested in finding out, my niece just went through it. She lives outside of Richmond. She's got pre-approved. She has an idea of what she can afford, but she's ready to go if she finds that property. You don't want to find the property and then have to go through pre-approval, because you'll probably lose the property that you're interested in. And then again, a pre-approval shows all parties involved that you're fully approved and there's no chance of missing settlement for your financial issues or anything like that. Now, keep in mind, once you get pre-approved, do not go out and you do not buy a new car, a new payment, a new significant change to your debts. We see lots of folks get pre-approved. They go out and start buying a house. They buy a new car. They have a new car payment of $800 a month, and now they don't qualify to buy the mortgage or to qualify to buy the house. So once you're pre-approved, no big significant changes to your financials on that. What is needed to get pre-approved? Well, your loan officer is going to need a complete application. So we're going to disclose everything up front. We're going to get a current pay stub, W-2s. We're going to get federal tax returns. We're going to get any and all account statements, checking statements, savings, draft accounts, mutual funds, 401ks, IRAs, stock. We're going to pull a tri-merge credit report. That means it's from all three entities of the credit reporting agency. And there has been a change. It's not our change. It's the market's change. It's the government's change. It used to be the middle score of the primary borrower. And the primary borrower was the one who had the highest middle score but made the most money. So if I made more money than my wife by $1 and my middle credit score was 820, we would both benefit from the middle score of my credit score right now to buy, because I need her income, obviously, to buy the home. Now, keep in mind, it's been reversed. If I need my wife's income to qualify and I make more money, the new market is the middle score of the lesser borrower. So if I have an 820 score and my wife has a 680 score, we are going to be priced in the market off of her 680 score. And let me go back a little bit to that, because when we were buying our house, my wife was an athletic director. I was moving up from Virginia Beach working for Credit Union Mortgage. But we bought, people were telling us what we could buy and what we were supposed to buy. And we bought a very modest home, 3-bedroom, 1 bath. We didn't need a big place. There was just 2 of us and our dog. And then, we did that so we could have income. But it really paid off when my wife, lost her athletic director's job, and she wasn't working for about 6 months. We were able to afford the mortgage payment and to put our son through college still, because we did not go and buy above beyond our means, even though people said that we qualified for something. So now she's back. She's an athletic director. We weathered the storm. But it's just something, again, to keep in mind. And there may be additional documents that we require. understand that it's not us or the credit union asking for the documents. So when we ask for all of your documents, we need the complete start to finish. If there's 29 pages to a document and the last page is blank, we're going to need all 29. That's what the rules and the requirements are. So this is a good time of year because you should be getting ready for your taxes. You have your pay stubs, you have your W-2s, you should have your financial information in tow. So it should be very easy to provide, and your loan officer can certainly get you pre-approved on those bits and pieces. Now, once you're pre-approved, this is what you need to do. Your pre-approval, as I said, is good for 90 days. And your loan officer can update it as many times as needed and necessary. You're pre-approved for $450. You find a house that you and your agent want to offer $350. You go to your loan officer and get a pre-approval letter saying that you qualify for $350. You give that and you start negotiations. Again, I cannot stress enough, once you're pre-approved, do not add any additional debt. And now the third piece is to begin working with your agent. Utilize the Home Advantage to find properties that you're interested in. Home Advantage you can register for free on your own. And you can see what properties that you drive by or what's in the neighborhood. You see the pictures, you can see what the selling price is. You have lots of good information. You'll start narrowing down where you're looking to buy for those homes and different things like that. So work with your agent on that. Things that I used to do, I bought during the mortgage crisis. So when people couldn't sell their houses, and the rates were at 6.5%, and oh my gosh, the sky was falling. Well, I stepped in and I was able to buy a house for 50 cents on the dollar. Yes, the interest rates was high, but again, I refinanced when they were lower. So again, work with your agent. Your agent's going to help you convey items. Again, when you go into a house, you want to make sure that the refrigerator, stove, the dishwasher, the washer and dryer, those things, it's called convey. I see a lot of times people buy a house, they move in and they said, well, where's my washer, dryer? And they had to go to buy brand new washers, dryers, different items. Your agent's going to walk you through to make sure that those things are conveyed. You also want to make sure your house gets what's called a home inspection. This is a third-party outside entity. You do not want the seller to provide an agent or a home inspector. You want you and your real estate agent to find one. They run $350 to $500, and they go through the house and they look for very, very big, large items. Foundation is good, the structure is good. Maybe you've got 2 or 3 more years with the heating and air conditioning system. That could be $5,000, $10,000, $15,000. So you could use that as a negotiation tool to get the price down or to get things around the house fixed. You can make a punch list. These are all negotiable items. So, again, work with your agent. You want to make sure that you're moving into a house that you don't need to put a $20,000 roof on in 2 years because you've got your mortgage payment and those things. So those are things that you do definitely want to consider in the situation. Now, you're negotiating back and forth. You found the house you want to buy. You're going to make a written offer or a contract submitted to the seller with your new updated pre-approval letter to show them that you qualify for what you're offering. The seller can either accept your offer, they can make a counter, they can make some changes, and it goes back and forth. You can go with the sales price, you can go with the lower sales price, you can ask seller for closing costs, the items that convey, the washer, dryer, the stove, the refrigerator, freezer. You go back and forth on those things. Remember, you have the power to walk away from the transaction if you so desire. So keep in mind, that it is a negotiation, and that's another very good way to have an agent. Let the agent work on your behalf. Tell them what you want to do, what you need to do. Let them work on your behalf to get those things done. Once the seller's happy, once you are happy, you both sign the offer and the offer is accepted, and that's when we have now a ratified contract. This is where you are on the clock. You need to get your your loan officer the ratified contract, and this is the time that you're going to be able to go through and start getting some things done. So the sales contract, if you could get us to the next slide, Charmaine. What happens next? Well, get that contract to your loan officer. 2, we're going to order an appraisal, and that's going to be the main, what the value is your house. So there's comparable properties that have been sold in your neighborhood. Your appraisal is going to go through to make sure that that we get an appraisal that's required. We're going to update any and all disclosure documents that we need to move forward. We're going to update any expired pay stubs, documents that we have on our end. We are going to reach out to you and your agent to see if you would like to, if you have a settlement agent or an attorney that you would like to use on your behalf. If not, in this area, we have settlement companies that we can refer, and some of these settlement and title companies will actually come to your house or meet you at a restaurant to close your house. I know that my wife and I, we've bought many properties over the years. Up here in Northern Virginia, as we know, it could take you an hour to drive into DC and back, depending on traffic. What we do now is we just meet the settlement attorney, or they come to our house or our apartment or wherever we are, our work, and close the loan as we need it necessary. But that's companies that we work with on our end. But if you need a settlement attorney, a title company, we can assist. If not, your agent will have some. And by going through us, we're going to also keep that rate and those costs low for you as well. This is when you have a ratified contract, this is where you're gonna work with your loan officer to lock in your interest rate and your points or no points or different programs. So, we've gotten you pre-approved, but that could have been 90 days ago. And rates may have gone up, rates may have gone down. Ladies and gentlemen, I've been doing this 38 plus years, and I've made great decisions. I've refinanced at times and the rates went up and I felt like the smartest person in the room. There's times that I waited thinking that I could ride, and I was smart enough to wait for the rates to come back down, and all they did was go back up, and it cost me money. When you find your house, the house that you want to live in, work with your loan officer, and my recommendation to you would be to lock your rate and program at that particular point. And stop worrying about, an eighth of a percent here, an eighth of a percent there. If that's something, or if you want to float the market, but understand that the market could go up a point and you may not qualify at this point. We are in a very semi-volatile situation. Rates are going up and down. The last few weeks, rates have gone down, so we're seeing a lot of activity for those particular members on that. But don't stress the rates and locks. It's, you find the house, lock it in, go with it, and then when rates come down in the future, go back through your credit union to get a refinance on that. Next slide, please. So we've got all the documents. We've got the ratified contract. You're going to work with your loan officer, your processor, who is going to get the file intact, ready for your full approval. And your full approval, your loan file is going to be submitted to the underwriter. The underwriter is going to review it from front to back in detail and make that approval and make sure that we're on place, that you qualify, we're ready to go, and that's when we're going to schedule your particular closing cost, your closing with the title agent on all of that. When it's ready, we're going to need to have everybody that's on the loan have a valid driver's license, passport. We're going to prove who you are. Money for the closing, old school is a certified check. Believe it or not, I still do certified checks. It drives everybody bananas, but I still write checks, and that's how I do business rather than online. But 98% of everything is done by wire transfer, and the settlement agent, money will be sent over to for your closing costs, your down payments, and different things like that. Your settlement attorney will walk you through that process as well on that. So when it's time, once you're approved and you close your loan, next slide, please, you're ready to move in. And honestly, this is where you're going to find out who your friends and family are. Anytime you move and load up the truck, this is where you know your real friends and your real family are to move. I actually drive a pickup truck, so I get lots and lots of phone calls for assistance on that. Keep in mind, it is a good time to buy. This is a very, very, very strong area. It's a good time to buy. Properties continue to appreciate. We're moving into more of a buyer's market where you can negotiate closing costs, points, different things, home warranties. Always ask for a home warranty. Maybe the seller could pay for that for you. That's a program or an insurance policy. If your heating and air conditioning does go out, hot water heater goes out, that assists in deferring some of that cost for you as well. If you have questions, do not hesitate to call the phone numbers here. You can call and speak directly to a mortgage loan professional, and they can walk you through the program. Or you could go through the credit union's website and utilize all the links, tools, and resources that are available. You can run loan scenarios, see what programs are cost. Loan scenarios are going to give you 15 or 20 different programs to review. 30-year fixed rate programs are going to be your lowest payment, might not be the lowest interest rate. But if you do an adjustable rate, maybe a 10-year adjustable rate, there's lots of programs available. Our loan staff will walk you through the positives and the negatives on any particular program. So you go in buying your house with your eyes wide open on that. With that, I'd like to open it up for questions.
Okay, thank you, Sean, for that great information. I think that our audience has, some great content to kind of mull over here and then also to get them started. We do have a couple of questions. Let's start with the first one here. Are there any 100% finance programs for first-time home buyers?
Only if you are VA eligible. So you are National Guard, retired active duty military, spouse of active duty military. Those are the zero downs. There are no conventional zero money down programs in the market today. The first time home buyer program is a 3.5% down payment program. And a first time home buyer can be considered if you have owned a home in the past and it's been 3.5 years and you're not titled or deeded on any other mortgage loan, you can requalify for a first-time homebuyer program. So people don't know about that. The first-time homebuyer program is what I'm going to use when my son buys his house because he has limited credit. He doesn't have a lot of money to put down. The first-time homebuyer program will allow me to give him the 3.5% down payment. It will allow me to help sign on the loan to make sure that he does pay it. And that's called a non-occupant co-borrower. So as his father, I can co-sign without living in the home on that. But there is no 100% programs. There are some programs available. I think a few other credit unions do offer a 100%. It's an internal program. And they charge, I think, 2.5% higher on the interest rate, and then they charge some additional closing costs and points. to the point that it doesn't make anybody any sense to go through that particular program on that.
Okay. Thank you so much, Sean. All right, our next question is refinancing as easy as it sounds? How should we prepare if we get an interest rate that we later need to refinance? And the bonus question, I guess, to that is, how does location really play into buying, really? I guess those are two separate questions there.
Oh,
Sorry.
very good. Well, the first one is an outstanding question. Could you repeat the first question too? Because that was my favorite question so far.
Yeah. Is refinancing as easy as it sounds? How
That's
should
all I
we
need.
prepare?
Yes.
Mhm.
Yes, it is. You already own your house. So when you're ready to go, you simply call your loan officer that you used, and we'll go through the refinance. Now, there's what's called a net tangible benefit. The interest rate has to fall at least a minimum of 0.5% or more for it to make refinancing available and make it make sense for you. If you're looking to refinance and you're saving $50 a month, but the closing costs were $6,000 and they're pulling equity out of your home to refinance, well, $6,000 divided by 50, it's going to take you almost 5 years to pay off just your closing costs to get back to even. So that's, when you come through us, we're going to make sure there's a net tangible benefit to you to refinance. Banks and brokers will do a $50 monthly savings because they're going to make a lot of money, and it's going to take you 5 years to get back to even. If it doesn't make sense, your credit union is not going to refinance you because it's not a financial smart decision. So that's one of the great things about it. You already own your home. They're going to do an appraisal. They're going to gather documents. You'll work through your loan officer on potential programs. I look for anywhere from 75 basis points to a whole interest rate before I refinance. So that's just something to keep in mind. And location is everything. My wife and I bought a little 3-bedroom, 1-bath, a home that was built in the 50s, but it's inside the Beltway. And yes, we got a very good deal on it. It was a foreclosure. We got it for 50 cents on the dollar. We did have to put some money into it, carpet, flooring, new appliances. We had to do some renovations. But now, because we're inside the Beltway, the property value has doubled on what we initially purchased. So it made the refinance certainly easier, lowered our LTV, loan to value, different things like that. But location is everything. I mean, keep in mind when, years ago when they said they were going to build out in Loudoun County, and they said that'll never take place. Nobody will ever drive into the city and it's too far. Keep in mind your travel to work, gas prices. People said that would never take place. Well, people have blown by Ashburn and Loudoun County, and my college roommate now lives down in Fredericksburg and drives up. Location. You want to find a place when you're looking for a house, one you're comfortable with, two that has good schools. Something that I always do and recommend when you go look to buy homes is to drive by the home early morning when kids are out and about getting ready to jump on the school bus. Summertime's coming out, drive through the neighborhood after work. Some of my pet peeves, and again, these are personal pet peeves, but if you're in a neighborhood where they park on both sides of the road and you can't drive down the road because another car's coming and everybody has to get out of everybody's way, that's one of my pet peeves. So we found a neighborhood where the parking is not on the street, so we just kind of kept it open. My wife and I, again, I'm older. I like a nice, quiet neighborhood. I'm just, my chocolate lab likes a nice, quiet neighborhood. So drive through in the evenings with your windows down. Get that feel. Make sure it's a convenient drive to work. But location is everything. in the real estate business? Very good question.
Great. Thank you, Sean. All right, Home Advantage, does it cater to both buyers and sellers? If you have someone that would like to do both sides of the transaction, can they handle that?
Sure, absolutely. If and when my wife and I, we used the Home Advantage program to buy our house. So when we sell, I'll utilize the Home Advantage agent again to sell my house to get a free cash rebate. And then when I look to buy another home, these agents are all over the country. So we'll get your loan officer can get you registered and find you a loan officer, a real estate agent that you like. If you're moving to Florida, sell up here, utilize an agent down there, you get free cash rebates on both. Keep in mind that you find an agent that you like. We're going to make some referrals. We're going to get you referred and registered into the program. But you want to make sure that you're comfortable talking to and working with your agent. If you're not, find another agent. They work on your behalf to find you the very best, and they should be working on your behalf. If you do not feel comfortable, if you do not have a good feeling about them, work with the loan officer, work with Home Advantage. We'll find you a new real estate agent going forward.
Thank you, Sean. All right, two more questions here. The first one, does borrowing from your 401k for a down payment have any impact on approval? Do lenders prefer having a cash saved, or does it make a difference?
Does not really make a difference as long as you have, when you get pre-qualified, what they want to look at is, one, your monthly income. Can you afford? Two, they're looking at your assets, so your 401ks, your IRAs, your stocks. If something should happen, like in my case, when my wife lost her job as an athletic director, the school actually went under, that we were able to afford for a certain period of time the mortgage payment until we got back on our feet. So, there are different ways to borrow. You could borrow your down payment from your 401k. You want to make sure that your loan officer will make sure that there's enough money for what's called cash reserves in case of an emergency. So you're not put into, we don't want to put you in a situation where that you cannot afford your house and have the potential of losing your house. So there's lots of different avenues. Now, there are programs out and available that do provide potential down payment, but we don't work directly with them. That would be you as the member's responsibility to find potential down payment programs, qualify for those programs and those funds before you get pre-approved and before you find particular properties to buy. By the time you get ready to get pre-approved and you want to go through and get one of those programs, it will not time up, and you'll probably lose your earnest money deposit and probably lose the property on that. But there are programs out there and available.
Okay. All right. One more. I think this is a little technical here, and we may need to refer this person actually contact us for details. But the question is, can you talk to us, walk us through closing costs when you refinance? Will it be the same? I guess to that question, I'm going to say to actually reach out to one of the representatives to go through your specific case, because every case differs, and that could probably change, right, Sean?
Those things can change. It depends if you're buying in Maryland. It depends if you're buying in Virginia. It depends on the county. It depends on the state. There's a lot of closing costs. There's settlement costs. There's title binders. There's title insurance. Title insurance is protecting the lender. So if there's a future lien or somebody says they own the property or somebody sold the property and they weren't able to, that title insurance protects the lender's investment. Now, when you're buying your own home, I strongly recommend when you're working with your loan officer to tell them you want an owner's title policy. It's about $50, $60, $100 more dollars, but that protects you in case there's somebody that comes down the road and says, my sister sold the house without my approval, but that owner's title insurance policy protects you, keeps you in the house, and the insurance company has to settle that outside. So again, make sure that you're going to be required title insurance, but you want to make sure that you get an owner's title policy as well. That'll protect you and your investment as well. Closing costs do vary from state to county, and since we're a national lender, you can actually go online through the credit union and look at the check rates or loan cost disclosure link and run some different variations in different loan scenarios, state specific, county specific. You can see, and then you can touch base on all the closing costs. If you're like me, directly call and speak directly to our mortgage loan professional. They'll walk you through. And then the other piece of that is once they get you pre-approved, we're going to disclose everything to you up front. So you're going to see what the closing costs are. You're going to see what the amounts are. You're going to see everything is going to be fully disclosed from start to finish. We protect your compliance throughout the process. We protect the credit union's compliance throughout the process.
Okay, thank you, Sean. All right, we have one more question here. Do all parties need to be members of the credit union if the co-signer is but purchaser isn't?
Yes. Definitely need to be, to take advantage of the credit union, benefits of going through and getting a mortgage loan, lower rates, lower closing costs. Yes, you definitely need to be members to get that advantage on that. And, you can speak to that. I don't know what the minimum down payment is or to start up an account. I know that I'm a member of 4 or 5 different credit unions, and so one of them might have a better car loan, the other one might have a better mortgage loan. I get the benefits of all 4 of those credit unions.
Well, to join Prince George's Community Federal Credit Union, you have to live, work, worship, or attend school in the county, and to join is $5. And we would love to have you contact us or visit us on our website just to get some information and to apply. And by the way, wink, wink, we do have the best rates in town. So with that, we're going to wrap up our webinar. Again, thank you, Sean, for joining us and just imparting such great information to our members here. Everyone that's out there looking for a home, we wish you the best in your home buying journey this season. If you have any questions, please feel free to reach out to CUMA with the information located on the website, or you can reach out to Prince George's Community Federal Credit Union at www.princegeorgescfcu.org. Thank you so much once again. A copy of today's presentation will be available on our website, and we'll be sure to email it out as well to all guests. Thank you once again, and have a wonderful, wonderful day.